Welcome back to the Long Call Option Masterclass. I'm Stephen Cox, CEO and full-time financial trader. At Share Navigator, we believe that education is financial trading power. So this is episode 3 of a 6-episode series where we continue on our in-depth analysis of the long call strategy, and we're using the Apple $240 call option as our active example. To quickly recap, on October the 17th, Apple was trading at $252.40. We bought the $240 call for a cost of $2,215 per contract that expires in 90 days' time. What we've done so far is established what the basics of the contract are, what our profit and loss will be, what our max profit would be, what our probability of profit, and what our break-even points are. But to master options, you've got to understand the Greeks. And today we're going to talk about delta, the directional force of call options. So finally, just if you like this content and you want us to provide further educational content and options and futures trading, please subscribe to our channel, Share Navigator. Let's get started. Delta measures how much the options premium changes for a $1 move in the stock. For a long call, delta is always positive and has a value from 0 to 1. So in our Apple 240 call example, you can see that the delta is 0.696. This means that the value of the Apple option gains 0.696 when the stock price rises by $1. And similarly, it would fall by 0.696 when the value of Apple falls by $1. Please note that when trying to calculate your potential return, always add the delta to the bid price or subtract it from the bid price, because this is the price you're actually going to sell your call option at, not the ask price. Some people make that mistake, and it's a critical lesson for you as well as to why you should trade options that have narrow bid-ask spreads. For example, if the share price of Apple goes up by $1, the value of our call option will go up by the bid price of $21.70 plus the delta of 0.696, which will give us $22.396. Our profit in that scenario would be the current value of 22.396 minus the original cost of the call option, which was $22.15, multiplied by 100, because 100 shares per contract, and that would give us a profit of $24.60. So again, this highlights why delta isn't an exact profit measure per $1 increase, because you've got to add delta to the bid price. And you can see the bid-ask spread, it's very important to consider when you're trading options. So a couple of notes for delta and call options. Delta increases as the stock moves further in the money. This means the closer you get to a win, the faster your options value will accelerate. And this is your leverage factor in action. And delta can also serve as a proxy for the probability of your call option finishing in the money. In other words, having real value. So a delta, for example, of 0.7 is a 70% chance that there'll be some sort of real value in that call option at expiry. It doesn't mean your probability of profit. Please be clear about that. We prefer when trading and buying call options to have a delta of about 0.7. And in terms of understanding delta, I firmly believe that you need to understand what delta is if you're going to trade options. But when you actually go to online trading platforms, this is all calculated for you through profit and loss tables when you're going to place a trade. And we're going to demonstrate that to you in episode 6. Okay, so that's it for delta and call options. A lot for you to take in there, folks. It gets easier, trust me. The more you look at it, the easier it gets. And if you're liking the content that we're providing and you'd like us to continue providing educational content on option trading, please like and subscribe to our channel. Next up, we meet the biggest challenge to all option buyers, and that's TIDA, and that's the enemy called time decay. We're going to cover this in episode 4. It's very important that you get to that video as well, folks, and we'll see you there. But if you would like to fast track your learning, why not consider taking a free trial of our mentoring service? This is where I would work with you one-to-one, establish where you're at your level of experience, and start building on your knowledge from there. You will have access to me and to other members of Share Navigator on a daily basis, and you'll also learn from our real-life trades. We share all of our trades with video updates every day as to what we're trading, why we're trading them, and when we're exiting them. This is the best way for you to learn. If you would like to take a free trial, please reach out. No obligation. We'll have a one-to-one web meeting for 30 minutes, and you can assess then whether our mentoring service is right for you.